Workday is down over 15% year to date. Well, in the same time, the S&P 500 is up over 16%, which makes no sense because this company has higher revenue, higher earnings, and a very reasonable PE compared to the S&P 500. So let's take a look at its fundamentals and see what we get as a stock price for 2030 and see if this is a good stock to invest in. Number one, we're going to take a look at our investing checklist and see how much should we allocate to Workday if we wanted to make this a part of our portfolio. For us to even consider in our portfolio, it needs to have revenue growth over the last 3 years. That means if it has zero revenue growth over the last 3 years, we're not investing in it. As you can see, absolutely perfection. It has revenue growth over the last 3 years. Matter of fact, it's growing above 15% every year for the last 5 years. It went from making almost $5 billion to today making over $9 billion. To be considered a primary position, it needs to have 3 consecutive years of profitability. Unfortunately, it came close, but it does not have that. In 2023, it reported a loss, meaning it had to take on debt and issue more shares to continue operating. As a result, we cannot allocate 40% of our portfolio to a position that doesn't have 3 years of constant profitability. This is because they had a massive opportunity for hypergrowth. As you can see over here, because of them taking on debt to fund growth, they were able to have massive growth the next 2 years. That's fine, but we want stability if we're going for 40% of our allocation to one position. So now we know the best we can do is a 20% allocation, meaning a secondary position. Now let's see if it continues to meet our guidelines for a secondary position. Right off the back, it meets our first step for being a secondary position, meaning 20% allocation. It has 2 years of consistent profitability, which as you saw in the chart, it did. Second, does it have 40% growth over the last 5 years? Now, if you take a look at the chart, hell yes. Now, majority of that percent growth did come in the last 2 years, but that's still impressive. That means the company is in a turnaround where they're delivering value to the shareholder. So it meets our second pillar for secondary position. And our last and final pillar, does it have momentum? We need to know that when good news comes in for this company, comfortably demand a 2x and the market is willing to pay. When we take a look at YouTube, it does not have momentum on YouTube. Usually I come out with this momentum on YouTube is just by doing a simple search, company analysis. And if you take a look, not that many people are doing analysis videos on this company and not a lot of people are talking about this. Retail community has no idea or very little interest in this stock, but it has a massive amount of hedge funds and analysts covering this stock. And these analysts will post articles, memes, and they will encourage their followers to buy this stock when good news comes out about this stock. That could be the narrative that AI is going to kill business application is dead. Minute that comes out, you will